Hello, and welcome to YP Investors Quick Tips. In today's episode, we will be covering relative strength. So let's navigate to the YP Investors homepage, and from there, let's go hover over Tools, scroll down to Relative Strength. And first, let's type in T for AT&T, and let's click Calculate Relative Strength versus Market button. So what this will do is the YP Investors Relative Strength tool will calculate the performance of AT&T, which is the symbol T, versus the market. And the matchup will be displayed right down below. And then once the calculation is finished, the long-term and short-term winners will be displayed. And it looks like AT&T is losing the battle to the market in both the long term and the short term. And here, the long term means you're going to be holding it for relatively longer than 6 months as a rough estimate. Short term, you might be holding it, for a couple weeks, for a day, for a couple months. So just so everyone knows, that's what those time frames mean on YP Investors. So if we scroll down to the relative strength chart, all these X's and O's are plotted using the daily closing prices for the market and for AT&T or whatever stock is in check. And basically, if the stock or the market is increasing more each day and the other one is not increasing as much, then the relative strength plot will show us the winner in both long term and short term. And this is useful because when you own a stock, you obviously want it to beat the market. Otherwise, you can just buy the market ETF. And here, YP Investors uses the collection of stocks in the S&P 500 as the market. So we use the equal weighted market sector ETF, which is RSP, and it just contains a basket of stocks that reflect the S&P 500, and each of those stocks are all weighted equally. So what it comes down to is it's a really good representation of the market itself. So then we'll be able to tell whatever stock you put in here and you want to calculate, you'll be able to tell if it's going to be beating the market or not. And if it's not, then it's not a very good stock to be invested into if you want to be making money in the long run or short run. So let's check another stock that's in the cell phone company industry. Let's check T-Mobile, TMUS. And let's do calculate market versus RS. And while this is calculating, once it's done, it will pop up below with the matchup and both long-term and short-term winners. So as you can see, T-Mobile is winning and beating the market in both the long-term and the short-term. So this would be a good stock to own versus AT&T. And instead of doing two separate calculations, you can compare them head-to-head using these fields on the right. So let's type in TMUS, and we want to compare this to AT&T. So let's calculate the head-to-head. Now this tool is very, very useful for when you have a collection of stocks that are similar and you want to just select the best one. You can type them all in here and keep track and mark down which ones beat which ones, and then you can narrow it down to the strongest one. And this is kind of how we do and create our sector ETF rankings for YP Investors. So here we can see that T-Mobile is beating AT&T in the short and long term. So if you wanted to invest in a cell phone company, you could grab all those companies' stock symbols, put them through here. So let's say we want to invest in AT&T or T-Mobile. Well, here this shows us we should be investing in T-Mobile. So this is a very beneficial tool. And our YP Investors quick tip for today is when you have a collection of stocks that you think are going to be good, come use the relative strength tool narrow it down to the top one, and then that way you will be set and you'll have the best performing stock from your collection. So the quick tip is to use the relative strength to get the best performing stock. And thanks for joining us today. If you haven't become a member or would like to, check us out at ypinvestors.com. Sign up for a free trial and have a great day.